Hi, good afternoon, everyone. Hope I'm audible. So, firstly, thank you very much to PMS and AIF team for giving me this opportunity to talk on a very interesting topic. And I'll also use this opportunity to thank and also compliment the entire SEBI team for putting this, into motion with a very robust and sophisticated framework. Because we strongly believe that the SIF platform will go a very long way in deepening the overall investor base, and also it has laid down the foundation for significant AUM growth going forward. So we at Nuvama AMC are extremely excited about this opportunity. As you all know, we have got in principle approval for mutual fund, which helps us to apply for the SIF license as well. And since we have, couple of really differentiated strategies running on AIF platform, it is actually a natural progression for us moving from AIF to SIF, and we'll talk about why it makes a lot of sense. So very quickly, we'll talk about our thoughts on the SIF and why we feel that it is one of the best innovation from SEBI. So firstly, as we all know that, mutual fund as a platform has done fantastic, especially over last 5 years. The total AUM stands at somewhere close to $1 trillion, and equity AUM is somewhere close to $500 billion. So this gives you a sense in terms of, how well penetrated and how broad-based the investor we already have. I think capitalizing on this whole investor base makes a lot of sense, and therefore coming up with differentiated strategies on this platform to suit different investor needs is the need of the hour, is what we think. The second most important thing is that this kind of innovation, if you look at right now the products which are being offered on the mutual fund platform, I would say to some extent they are very plain vanilla products. However, if you give higher access to derivatives, I think that the whole cliche term, which is risk reward ratio, will make a lot of sense on back of these kind of strategies, because having access to derivatives will reduce your overall risk, but at the same time help you generate significant outperformance, which is alpha most investors are seeking, right? The third and the most important thing is that as of now, all these kind of strategies are available on AIF platform, but because of the ticket size, not many investors who are not willing to take that kind of risk don't come under the AIF platform. Whereas, if you look at now the framework under SIF, I think it facilitates in a very fantastic way to allow most of the investors who want to go step by step rather than, straight away going to 1 crore ticket size. So I think this is a fantastic step towards democratizing the whole, the mutual fund offerings and the AIF offerings. Lastly, as just what we discussed, that this is actually now the launch pad for future growth. So the way we look at it is that there are lot many categories, be it mutual fund or AIF, where because of certain limitations, the return profile is subpar and not meeting investor expectations. And therefore, we feel that SIF platform is a mix of, I would say, the best of all three worlds, which is mutual fund, PMS, and AIF. Whatever the limitations were there, they are getting addressed through SIF, and therefore this is the next leg of growth, and therefore we see this as the new age mutual fund in terms of the whole structure which has been laid down. Obviously, this is just the start, and therefore we'll have certain limitations when we start moving forward, and some of them are clearly lack of talent right now, which we feel that gradually, as and when the products are introduced, the teams will be built across AMCs, and also the investor and the distributor awareness. I think that is one of the most important factor, because they are the ones who need to understand how the SIF platform is actually making a lot of sense versus any other platform. Now, this will give you a clear differentiation in terms of where does SIF stand versus all other platforms, and you can clearly see that on multiple fronts it is making a lot of sense, because in terms of ticket size, which is the first one, with 10 lakh also, if you invest in one particular AMC, you can have 4 different schemes, 5 different schemes all put together, 10 lakh rupees. So that actually helps you diversify your investment. The second and the most important thing, I think, which will really help this category grow is the equity taxation. Because if you look at the AIF taxation, it is at the MMR rate, which is at 40%. Whereas now, you are getting products having access to derivatives, which will be taxed at long-term, short-term capital gain tax. I think that is one of the most important factor. And lastly, I would say that, so far we have seen, and also there has been so much hue and cry about investors losing money in derivatives and option segment. I think once we have these kind of sophisticated products having access to the options market, and these strategies are run by experts, I think a lot of people are waiting on the sidelines who want access to options and derivatives but don't have that kind of expertise. So they can actually come in on this platform where they are offered products having access to derivatives. So I think on multiple fronts we are seeing this platform as a far superior platform versus all the other three. Now this will also add up to what we were discussing, why this platform is so superior. And you'll see that across multiple parameters. One is the specialized strategy. So as we discussed, if you look at PMS, PMS is more of a mid and small cap kind of a product offering, and largely it is for investors having a very long term kind of a horizon, say maybe 3 years, 4 years, 5 years. Whereas on SIF, you'll have strategies which will have exposure to mid and small cap, and at the same time you'll have access to derivatives. So many times what happens during crisis, we have often seen that mid and small cap actually end up correcting quite a lot, but you don't have any other option to hedge, right? On the PMS platform, you don't have that option. But now if you are building that kind of a portfolio with an flexibility to go and hedge during period of crisis, that will go a long way in terms of protecting the overall drawdown, and so on and so forth. If you look at the whole, the marketability also, right now we are running AIF strategies since last 5 years, but obviously there are restrictions in terms of how we can market it. We cannot talk about a performance, we cannot publicly talk about a product strategy. But now with those kind of products coming under the SIF fold, we'll have a lot of flexibility, and investors will also get that kind of transparency to compare our products with peers and understand where they actually should be investing basis their goals, right? So I think on front of marketability, also on transparency, if you look at the AIF portfolios, they are not published, right? Where just like mutual fund. But now if those strategies come under SIF fold, you will get to see those portfolios every now and then, so that actually gives a lot of confidence to most of the investors. Lastly, as I said that the QIB application, right? I think this was one of the most important thing which SEBI has retained, because if you know that if you are a PMS player, you cannot have this QIB, the QIB application for most of the anchors and many other things. But now with SIF retaining that status of QIB, you have that flexibility again to participate in multiple anchors and different kinds of offerings. So I think on multiple fronts, what we discussed earlier, and through these all parameters, we think it stands to gain a lot, and therefore we are extremely excited about this opportunity. Very quickly, the initial steps by SEBI, and I'm sure that we have a long way to go, but the initial product categories which have been announced are threefold. One is equity oriented products. So within equity oriented, you have the equity long short, then you have equity X top 100, meaning you have to have a strategy which doesn't invest in the top 100. So it becomes more like a flexi cap kind of a product. The first one is an equity long short across the board. And third is the whole sector rotation. So this is something that we have always seen in a market, that some sectors end up doing well and the others are in a down cycle. So this kind of a product, actually, if it is run by an expert, it gives a significant advantage in terms of delivering outperformance versus the benchmark. So I'll give a clear example over here, that IT as a sector, if you look at it, has gone nowhere over last 3 years. Whereas sectors like auto or even banking or metals, they have done reasonably well. So someone who has that view over last 2 years can be long, the auto and banking, whereas, be short on the overall IT sector and deliver far superior outperformance versus the benchmark. So being short actually gives you this kind of flexibility, which is now available on the SIF platform. Secondly, these are all debt oriented products. So just like we have the equity long short, we have the debt long short, and similarly we have the sector long short on the debt side. I think where the clearly excitement has actually started over last 2 to 3 months is in the last category, which is the hybrid strategy. This strategy, I would say that is more like I wouldn't compare it with debt, but if someone is like, okay to take a little bit of higher risk, the return profile of these kind of products is somewhere close to 1.5 to 1.7x. So these are all hybrid strategies where, I'm sure you guys would be aware about absolute return strategies which are being run on AIF platform. So that actually fits clearly into this bucket. Where we feel the excitement will really begin to play out very quickly, I would say in the near term, is the equity long short. Here I would just like to give you a gist in terms of why we are positive on this. Because if you look at the overall large cap mutual fund category, it's somewhere close to 4-5 lakh crores. And somewhere we believe that, on a post fees basis, a very large part of the AUM is underperforming even the benchmark. And that's mainly because, you don't have the hedging, flexibility. And also, if you look at most of the portfolios, they would be spread across all the sectors. Whereas if you look at a product like an equity long short, this product helps you hedge every now and then. And most importantly, you are not forced to have a benchmark hugging portfolio. So these kind of strategies, I think, makes a lot of sense versus the large cap mutual fund category, and therefore I think that this can clearly pick up in near term. The second one is the equity X top 100. So this is something like a flexi cap with a option to go and hedge in derivatives whenever you believe that markets are not looking good. Otherwise, if you look at a normal flexi cap, it will be like a long only, right? And they are generally invested 100% all the time. But now suppose if there is some major negative news over next 1 month, 2 month, the entire portfolio actually gets impacted. Whereas if you have the same strategy on the SIF platform, you can reduce your exposure and go short and protect the overall drawdown. So we believe that this category can also see a lot of traction. And lastly, as we discussed earlier, the whole hybrid strategy, which is the absolute return strategy, the multi-asset allocator, this is a fantastic product for investors who want access across different asset classes. So many people feel that they have lost out on the whole gold silver movement, or they feel that in debt there are so many other options. These kind of products on a post fees, post tax can deliver far superior return versus any other debt product. So I think these are the three products within the SIF gambit can see a lot of traction over next couple of quarters. Very quickly, why we feel this makes a lot of sense for the investors, and we discussed earlier. One is having access to the option strategies, which they were doing it on their own so far, but now you have that option on a more sophisticated and a mature platform being run by real experts who have been in the industry for 2-3 decades. So that is one of the biggest advantage. Secondly, diversification. You see most of the investors as of now have allocation only to long only strategies, and we have seen what happens with these kind of long only strategies when the markets actually correct. But if you have the option of investing into long short, which was earlier available only on AIF platform, now with 10 lakh ticket size and much better taxation, I think that this segment can also see a lot of interest from the investors. Tax efficiency, this I think we'll cover in the subsequent slide in a bit detail. And obviously, the ease of investment, as we discussed, that the 10 lakh ticket size makes a lot of sense. Now, I think this is very important for all of you to understand why we have been so bullish on the SIF platform. And this is one of the biggest factor, I think, driving growth for SIF going forward. So we are running a long short strategy since last 5 years. And in spite of having a significant, I would say, outperformance versus the benchmark on a post fees basis, but because of the taxation, which is pretty adverse, as we discussed that it is at 39%, the post fees, post tax return actually comes down to as low as 7.5 for people who are paying full tax. For us, it is a blended tax rate somewhere close to 20-25%. But still, I would say that returns somewhere around 15% drops to as low as 7.5, which is a 50% leakage because of the higher taxation, which now under SIF, if you look at it, from 15, you land up somewhere close to 11-12%. I think that is a significant improvement in outperformance, and that too with 15%, which has been the Nifty CAGR. For managers who can deliver far superior performance versus Nifty, the outperformance on a post-tax basis can be far better even versus any other mutual fund long only product. So I think this is something what we all should note. I'll just skip this part, I think, because we are running out of time. Very quickly, in terms of players who have already launched, we have Edelweiss, we have SBI, Quantum, Quant Mutual Fund, and a couple of other players. Interesting thing to note over here is it has been just 2 months, and in a matter of 2 months, the hybrid products, which are very base category products, has attracted inflows of somewhere close to 2,500 to 3,000 crores, which is actually approximately 10% of the net equity inflow into the mutual fund. So that can clearly tell you the interest which is actually building up in this segment. And going forward, there are 2-3 major categories I would just like to discuss. One is, as we spoke about the large cap category, which is 4 lakh crore category. Then you have the arbitrage fund, which is 3 lakh category, and then you have the whole hybrid, which is another 4 lakh category, right? And on top of that, you have 1 lakh crore sitting in category 3 AIF. All put together, we are looking at somewhere close to 17-18 lakh crore of pool. And even if you assume that the 20% movement from those categories because of poor performance, or for whatever reason, I think over next 2-3 years, we can see this category moving from 0 to almost 3 to 4 lakh crore very quickly. So I would strongly urge investors and distributors to take a look at this segment now, because I strongly believe the way mutual fund has grown, we will definitely see this category, this platform, as the fastest growing platform what we have seen over last 2-3 decades. So these numbers are a bit dated, but as we all know that the mutual fund is at 83 lakh crores, out of which equity is somewhere close to 43 lakh crores. Within that 43 lakh crores, you have close to 10-11 lakh crores on passive, and we have close to 4-5 lakh crores on the large cap category. So we are targeting these segments because we feel that it makes a lot of sense for the money to move to better risk reward offering solutions. So we'll end there. Happy to take questions. Sorry, we are not taking questions. Okay. Yeah, thanks a lot, everyone.